Eric Mwade. Just want to do a quick review on the stocks you mentioned and take a look at some of the things that you had asked about. Number one, your entry price I show is somewhere here at about 71.38. So that's your entry. That's a good entry, as we discussed in a prior video. I also like the fact that we are seeing a crossover between the 13-week moving average and the 34-week moving average. So that's a bearish look. Now, one of the questions is, how long do you want to hold on to such an instrument? Number one, since you are not losing money, you're actually seeing a good trade on the stock as of the first 2 weeks of holding it, or last couple of days. I think you want to own it because this crossover, number one, is a long-term view. So you're not trading this for just a daily move. You're looking at a weekly chart that looks slightly bearish. You got your RSIs making all-time lows, which is bearish. So the indication here is, in terms of length, you want to give this a couple weeks, couple months to see whether it drops much further and gives you a nice run. Because if you take a look at the previous, if you can draw this line here, so if we extend this IPO and assume that the crossover on the bullish side, the 13-week moving average crossing above the 34-week moving average, you see this took many months to get accomplished. So if you are looking to maximize on a move, if your entry was based on monthlies and weekly charts, then the idea is to own for weeks and for months. Again, if you're using the weeklies and the monthlies to make your decisions, that probably means that you're looking to own the instrument for weeks and for months, because that's the look that the monthly chart gives you. The one thing I did not note here is, take a look at this level here. So if we were to draw a line like this and extend it like that, the one thing I would say, if the stock somehow finds a way of moving above this line with uniform activity, maybe I should draw it different, then you can use that as a sell signal on from a visual understanding that could lead to a recovery in the stock. So let's say if this turns out to be uniform activity over the next 2 weeks, something like that, then you'd have to be stopped out or have to get out of that position, because the weekly charts would show that they're turning around. But we haven't seen that yet. In fact, the fact that it's making all-time lows is an indication that the trade could actually work out to the downside, much more downside left there. Also, take a look at the monthly. We are just starting to see the move. Take a look at the weekly MACD, and we are just starting to see a move below zero for the first time ever, which suggests that there could be momentum to the downside, much more momentum. As both lines cross below zero, that's when you get another swoosh in the direction, which is in this particular case lower. Take a look at the monthly, and you can see that the stock is making all-time lows on the monthly RSI, indicating there could be more downside action. Also keep in mind that the stock had come all the way from $10 in 2012 all the way to, let's even say, about the $90 range, almost a straight shot. So you can say that if it can drop from 90 and to half of that would be, so somewhere in the 40s would be half the gain, or even in the 50s. So it would be half of this move here, from here to here, half of that, so that's plus 40, so something about in the 50s would be a target. So you could say that if it's going to lose half its value after this nice run, then this could be the target here in the 40s, in the lower 50s. So I still think more downside. Also, you can see that the MACD on the monthly is making fresh lows, and that's why it's been dropping. And also the possibility of moving below zero could indicate the probability of more downside action. On the daily, you say that yesterday you sold some of your position, and you are wondering whether that was a good idea. Now, you sold for a profit, so that can't be a bad idea. But I would look at this move from here to here. and figure out where this move began. So use the information of the stock. You can see a nice move here. So figure out where that move began, and you see that the RSI moved above that range there, which is this entry level there. So all you have to do is draw a straight line from there, and the stock is not gonna be in a flight mode, or not gonna be in rally mode until it can move above that line. So I would be more patient, because this is where the last move began, which took it from about 55 all the way to 90. That's a big move in a couple of months. And so unless it can move back above this level, I would call this hold and wait period, because the stock is below a critical level. And so as long as the RSI is holding below that and you are not losing money, I would continue holding. That would be my view. Also, we take a look at the hourly and figure out where the hourly chart began the most recent slide. So for example, if we were to draw a line, remember this, there's no hard science here, but if we draw a line like that, maybe even extend it a little bit further, you can see that this line connects the lows, and all these lows was successful in holding the stock and at least giving it some momentum and a slight move higher. So this line was well established here, and you can see that once we broke below that line there, which happens to be this drop, the stock has been struggling to hold above the line. So until the time comes when the stock is above this line, I would say that the stock is to be held, to be held, because it seems that eventually it goes down. It is only until it moves above this line where it's been finding resistance that you can think that maybe it's going to recover. So that's my thinking. Is I don't see it breaking out necessarily because of this prior break line not being violated to the way on the way up. So this is still resistance in my opinion. Anything below that line is bearish territory and a reason to hold on to the stock. At some point, should it move above that line, then maybe you can say that it is due for some type of a short-term bounce. So the key being that you're not losing money, and number two, the fact that it hasn't necessarily really given us a buy signal tells me that it can be held much longer. Okay, and in fact, I don't know whether you like the idea, but if it comes to this level, which is what it seems like the RSI is doing, if it comes to this level here and shows resistance, let's say it does something like this and rolls over, I would add on to some short positions there, because the weeklies and the monthlies show that the stock could have some more downside momentum. So that would be my view. And you asked about a stop. You know, you can set a stop anywhere. The stops are just there to protect you. There's no hard mathematical reason to set them at a set place. You just set the stop to protect either your gains or to protect your capital. But you can play around with things like that, and you can use that 65 number you had mentioned. So you can use, for example, the high for the day. The high for the day is 65.25. Let's say you don't want to lose your gains since you got in somewhere here. You don't want to lose your gains. If it moves above this, you can take your you can be stopped out at that point. But stops are not a big deal. As long as you're considering stops, then you're doing it correctly, because you're protecting either your gain or you're protecting your capital. So either way, you can use your stops. There's no bad way to set your stop, as long as there's a stop depending on whether you want to lock onto a gain or you don't want to lose a big chunk of money after you've gotten into a position. So your stops can be varied. There's no hard science there. So the other one you mentioned is ACHN, and you questioned why this is not the breakout level. The reason why I did that is, yes, you can use this level here, this high. That should be at, I believe, 14. Make sure 1481 is, I believe that's what you asked. Well, how come this is not the buy point? Good question, actually. Why is that not the buy point, being that it is the highest weekly closing high? I'll explain that because I'm looking at this slightly different. I am using the prior high there, and I believe that was at $13.97 or somewhere just around $14. So that's what I'm using. The stock had moved above that for 1 week and now coming back to test this prior former weekly closing high here. So if it holds on a weekly basis, then we can assume that the prior breakout is still holding. Hope that makes sense. So yes, if you want to find the next buy point on an ideal basis, it is this close. But I am going back to the prior breakout, and so let's say here, and using that to see whether you can buy the stock after the breakout and now coming back to test the breakout. Sometimes stock do that. They come and test the breakout and then they move higher. So this would be, in theory, a nice place to go long if the stock can hold above the prior weekly closing high. In fact, this chart does give us an example of that. You can see there was a prior weekly closing high here. Stock broke out here, and then finally would come back about 3 weeks later to test that line, which is the prior breakout highs, and it jumped to new highs. So maybe I can try and explain this a different way. So that's your weekly closing high and the stock has stopped there, and so you draw a line in the future after the stock has spent 2 weeks down. If it comes and breaks out, sometimes stocks come and test that line before moving higher. So you can use this test, if it is successful, as an entry point using the prior closing high as your reference point. So the idea is you want to buy during the test. Now, what happens if the test fails? So let's say if the stock comes here and fails to hold the prior support line. So if this line doesn't hold and it breaks below that, then you get stopped out because it means that this breakout is failing. So yes, you can either use the next breakout if it comes, or if you ever get that breakout, and the price there would be, as we mentioned, 14.81, which is this weekly closing high. You can use that down the road, or you can say, you know what, maybe what the stock is doing is testing this prior breakout at around 14. If it holds above that line, then this is still a successful breakout, because as long as the stock is holding above the prior weekly high, then the breakout is successful. So that's how I was looking at that. And one of the reasons why is because the stock is still, if you take a look at the RSI, so trading above 50 in this general area, which is where it's been moving higher. And so I think if it can hold above 14, it could still do well. Could it fail? Yes. So if it moves below the prior weekly closing high of around 14, then you can get stopped out or you cannot take the trade. Otherwise, wait for it to move above 14.81, which is the next ideal breakout, which is the current weekly closing high. So you got two options. You can go long when it breaks out down the road, or you can use the prior breakout and consider this probably an entry point for a test period after it had tried to break out above 14. Hope that makes sense. If it don't make sense, let me know. Talk to you later. I am out. Woo!